Hey everybody, I hope you and your loved ones are safe, happy and healthy. Before you listen to or watch the show, remember to subscribe and follow us on Twitter, Facebook and LinkedIn to stay up to date with all the latest news and updates from my legal club. If you, your family or your business need any legal support or no obligation solicitor quotes, please get in touch with us at mylegalclub.co.uk. Before you listen to the show, please note the content is for information purposes only and is not to be relied upon. Stay well, and I hope you enjoy the show. Rogers, I'm delighted to be joined on today's show by Peter Barton, partner and head of equity release at Ashfords Solicitors. Peter specialises entirely in advising clients on equity release schemes. Peter is a member of Action on Elder Abuse, Solicitors for the Elderly and the Alzheimer's Society. Peter is one of the co-founders of the Equity Release Solicitors Alliance and a prominent member of the Equity Release Council. Peter also chairs the Consumer Protection Working Group and is a member of the Long-Term Care Working Group and Public Affairs Working Group. Peter, apart from making you blush with that impressive CV, how are you?
Thanks. Thank you, Sean. I'm very well, thank you.
Brilliant. You started specialising in equity release in around 2003, as I understand it. Forgive me if I'm incorrect with that date. What attracted you to this area of law initially, and what has led to you continuing to specialise in this area nearly 20 years later?
Well, interestingly, actually, and I hate to correct you, I actually started in 1997 with a product under the no long defunct NPI, National Provident, and I was very new at the office at the time, and I was specialising in wills and tax and trust, so very much dealing with the older client basis at the time. And a case came into the office, and it's thought, well, we'll give this to the new boy at the time because it seemed to fit in with what I was doing. It's very much kind of the client care, the elderly client care, and it was very new, very much in its infancy at that time, and I kind of developed and grew as the product developed and grew from just one or two products up into the mass array of products that we now have. So it was just very much, it fitted in very well with what I was doing, and sort of helping when people were making wills and powers of attorney, they were thinking about retirement, and very much equity release was on that same ilk.
There's a lot of assumptions made about equity release. Could you explain for us in layman's terms exactly what it is?
Well, it's changed a lot over the years. I think the very basic premise is that provided that you're of a certain age, generally over 55, but the whole realm of products open at the age of 60, you own your own home. It can have existing debts on it, and it's very much designed to take a form of a mortgage over the property that in reality is only repaid back when either you've died or both of you have died if you're a couple, or should you have to leave the property permanently, for example, to go into a care home. So it's very much a way of funding either clearing off existing debts or for some other purpose.
And for many, equity release has had a bad reputation. What changes, if any, have there been in the last decade to improve the regulation of this area, and how could people take comfort in let's say, a different reputation, if you like, in terms of what equity release is in 2021 as opposed to what it might have been in 2010?
Oh my goodness, it's unrecognisable from when I first started as I landed back in the office in Devon. Certainly the regulation side, purely on the financial, if we look just at the financial advisors side, there are now several exams to pass before you can be qualified to practice in or advise on equity release. It's very closely scrutinised by the FCA, who are always involved, and certainly there's the Equity Release Council, which kind of grew out of SHIP, as it was known many years ago now. And I'm pleased to say that the Equity Release Council have actually grown in strength and are willing to, they keep a close eye on complaints, they scrutinise advisors, and keep very much monitor the advice that is given. I'm very quick to jump on any complaints and any suggestions of any poor advice. But from our perspective, I think we provide, not only I would say we are the guardians for the client, in the sense that we always now have to see clients face to face. So we as a firm operate home visits. So we're not dragging clients across the country to come and see us in our offices, but every client we see as a home visit has to be face to face under the Equity Release Council rules. So I think for the advisor's peace of mind is, even in this current climate, they're operating, a telephone service rather than a face to face. The clients have to sign in front of us a certificate which confirms that, first of all, that they've been seen face to face, and secondly, that they're aware of what they're doing and they fully understand the financial implications of taking out a lifetime mortgage, both for their own affairs, but also for that of the family. So, since these changes have been brought in the last decade, the number of complaints or potential for complaints has dropped dramatically, and certainly lenders, advisors, and others alike can always rest assured in the fact they've been seen face to face. And we produce a certificate, and the fact the financial ombudsman bats away any potential claims, as does the legal ombudsman, provided that there has been that face to face basis. And we are certainly at Ashfords, we video record all of our meetings. So if someone from the family came forward later on and said, "Oh, mum didn't know what she was doing," and then we produce a video showing mum laughing and joking, it kind of adds weight. So I think for any advisors listening in, it is very closely regulated from all aspects. And, there's certainly, I like to think that there's very little chance of a client being unaware of what they've signed up to and any potential for complaints in the future.
And what are the typical reasons for people wanting to do equity release? I think most people could probably guess, but in practice, Peter, is it what you would assume it to be? People maybe wanting to, for instance, gift a deposit to a loved one, maybe a child who's buying the first house, or perhaps debt consolidation. What do you see as the most common reasons for equity release?
I think if I was to do a top five, I think the first one would be debt consolidation. It staggers me, how many clients of a certain age still have quite substantial mortgages on the properties, combined with CCJs and other debts that they want to repay. And as you rightly say, the next number two of sort of decreasing importance will be gifting. I see an awful lot of gifting, particularly to children, to help them, as you say, fund a house purchase, or to reduce their own borrowing, or indeed to save inheritance tax. So it's, particularly in London, it's very rare to see an equity release scheme of less than 100,000 being released. Gifted, after 7 years, you've saved 40,000 in tax, depending on the size of the estate, of course. So gifting is another main reason. A third one would really be very much the, I suppose, provision for future care needs. So we do have people who want some money set aside to pay for care, either for somebody already in the home or to pay for care at home. So a lot of people now are taking the view they don't want to end up in, some care home. They'd rather pay for a live-in carer to come in with them, or to pay for private care. After that, really there are many other reasons, but largely you see the adverts on television suggesting people are buying motorhomes, and actually surprisingly a lot of them are. It is that the motorhome purchase is probably quite high up, or changing the car. We get very, very few traditionally luxury uses for the equity release scheme, but it is the motorhomes, it is the holidays, and actually to pay for family weddings and things like that come along later on. So, or to help fund a divorce.
Yeah, I can imagine I know a lot of my cousins and friends pull their parents' leg a little bit, saying, "What are you doing, spending my inheritance with all these holidays? Can you not hold back a little bit on them, please?" Is there any age barrier to equity release? Can over 55s do it? Is it strictly over 60s? Is it over 65s?
The barrier is 55. You can't borrow on a lifetime mortgage under 55. When you get between 55 to 60, there are fewer borrowers available, fewer lenders available. But 60 is really the main starting point. There's not really an upper age limit, but certainly lenders are always very concerned when it's people late in the 90s. It does reduce the amount of lenders available, because they obviously have concerns about lending at that age. But certainly, I've assisted in a lifetime walk to a 103-year-old who was, completely alert and with it far more than I am. So there was no upper limit, but certainly there was a lower age limit of 55.
Wow, I think there's quite a lot of Everton fans out there that might need to live to 103 to see them win a trophy, actually, on that note. Sorry, if I ever can mention A, football and B, Everton and something like this. Then
it could be worse, Sean. It could be worse. You could support Bulls and Wanderers like I do. So
fair point. Well, congratulations on the promotion.
Thank you very much.
Yeah, my sister-in-law, her family are all Wanderers. So
yeah, League Two Team of the Year. I won't mention that, but yeah, there you go.
No, good to see you moving back up the leagues, definitely. Yeah. What criteria on equity release do you need to apply when assessing whether you can represent a client? As an example, when would be an example where it wouldn't be suitable to proceed with equity release, apart from the age barrier, of course?
I think certainly as a firm, we also have to watch out for cases of where we suspect a vulnerable client. We're not saying we would say no, but certainly we seem to be getting more and more vulnerable clients who are being taken advantage of, be it through family or through carers. So we're not satisfied that actually they fully understand what they're doing or undue influence is being put on them. We will cease to act. And I think that is it's not even a matter of, reassuring the client and being certain that they understand. I think when we appreciate that they are being put under pressure, we do withdraw. And I do, it's a difficult one because we always have the concern that actually the customer or the person who's causing the abuse will just go to a different solicitors. But I know the council are looking into almost a kind of a GDPR proof sort of whistleblowing to make sure that people can't borrow. Other than that, I think certainly certain criminal offences, if people have committed certain criminal offences, then the lenders will certainly decline from acting. And other than that, really, the only time we'd ever be unable to act is if the client's property deeds wouldn't allow it. So, for example, it's the same as a financial advisor would look at it. If, for example, the lease was too short and the clients weren't willing to extend it, or proximity to a business. So we had a property that was declined just yesterday, but that was only 2 doors down from a pub. No, personally, I thought that was a bonus and should add value to the property, but the lender didn't take that view, sadly. So there's very few instances that we would decline, and even with loss of mental capacity, as long as the client has a power of attorney in place and the attorneys are on board with it, we can proceed.
Watch out for your pubs. On that basis, what's the process look like from someone instructing a solicitor, Peter? What are the key milestones and what kind of time frames would someone be looking at to do equity release?
Oh, I always say we are very we're at the very end of the chain, as it were, of the process. Once it gets to us, it should really be plain sailing. We recognise at Ashfords that the most work and the hardest work is done by the financial advisors, which is why we're always doubly careful to make sure that we look after clients. So if, for example, Sean, you emailed me and said, Peter, or use the online instruct, we would open that case within 24 hours. So the first milestone is we would email you, Sean, and say, Sean, we've made contact with the clients. We will always give the clients a ring and send them our formal engagement letter, and we'll ring them before they get that letter to let them know exactly what they'll be receiving and what we need back straight away. After that, the next milestone really is the offer coming out, which obviously, as we all know on the call, can vary. It tends to be about a week to 2 weeks from the advisor submitting the application. We always say to clients, when you receive your offer, we'll get ours about 4 or 5 days later, because with a lifetime mortgage equity release, the lenders have their own solicitors. So my copy of the offer goes via their own solicitors, who produce the mortgage pack and the mortgage documents that the clients are signed. So there's a 3 to 5 day delay from when the client gets their offer to me getting mine. So the next milestone is the offer, us getting that. We will be contacting the client within 24 hours of receipt of that offer, usually the same day if it's before 3 o'clock, just to say, offer is in, are you happy to go ahead? Can we make that appointment to come and see you? We'll notify the advisor at that point. All the clients, also all the advisors, will have access to our online portal. So they can get updates anyway, but we'd always email an update through. We then instruct our travelling solicitor, to make an appointment with the client, and we let the advisor know what date the appointment is. After that, it's very much a next milestone is when the documents are back in and sent off to the lender's solicitors, and then after that it's completion. But at every key milestone, the advisors are updated.
So would it be fair to say that people will be looking at maybe a 4 to 8 week window?
I think that's fair. I think from submission of application, I would say if you're on a couple of weeks for the offer, then we would say 3 weeks from the issue of the offer, provided the lender's solicitors are firing on all cylinders.
Big if.
Yes.
You touched on some of the reasons why equity release might fall through or not meet criteria. Once you've started your work and been formally instructed, is it pretty much guaranteed that it's going to sail through? Because like you say, a lot of the work's been done with, brokers before that point and lenders before that. And if things do fall through, is there anything that can do to mitigate against that, or is it in essence to do with maybe lenders and down valuing, for instance, or things that they can't really do much to mitigate against once they're at that point?
Well, I think my advice would always be to advisors, we can dramatically cut off the not taking up the NTU cases, as we call them here, the not taking up cases. By if the advisors look at their diary on a Monday morning and see what I'm speaking to 3 clients this week about equity release, if the advisor emails me with the name and address, we'll get copies of the deeds. If a case is going to decline, it'll be on, it's very rare that it'll be declined on the state of the property. It'll be more on what's on the deed. So, we can provide the advisors with a copy of the deeds, and I will flag up to the advisors any particular issues. So, we can any issues can be spotted early on, and so the advisor can almost say at the very first meeting, look, there's an overage agreement on the deeds, or we can see this other issue on the deeds. Who's this person on the deeds that we need to get rid of? So any kind of problems can be we can troubleshoot quite early on, and certainly we find that we have probably less than 5% of cases don't complete, and that just tends to be because there may be a historic restriction on the deeds that the lenders don't like or that we can't get removed. But most things are we can overcome. So even things like a lease extension, solar panel, lease variations are very common at the moment. They drive us mad, the old solar panel leases that all seem to be thrown on people's roofs with a very poorly drawn up solar panel leases at the time. But most things we can resolve.
How long does it take you to turn around that kind of initial search, Peter, if clients were to ask their brokers or brokers were to approach you directly on that?
As long as it's during the working hours, same day. So if you email me at 9 o'clock, I'll probably email you by 10 o'clock with a copy of the deeds.
Marvellous.
And I will always put I'll always put a commentary on it saying nice deeds, or watch out for this restriction, or they own as tenants in common, so watch out for example, for LV who don't lend on tenants in common, that sort of thing.
No, that's absolutely fantastic information and great to hear. What if a borrower has got a lasting power of attorney in place? I think many might think that that's a hurdle that can't be overcome potentially with equity release, but my understanding is you're a bit of an expert in this area, Peter, and you would differ with that assumption. Yeah,
rumour has it that I'm an expert, but someone will argue against it. Certainly, it very much depends. If the client's got a power of attorney in place, then if obviously there's still got capacity, all the lenders insist that the borrower themselves sign it. If the borrower hasn't got capacity, then as long as the purposes of the loan meet the lender's criteria, in other words, it has to be used for, the benefit of the borrower, it can't be gifted away, then it would take no longer to complete a power of attorney case than it would a standard case.
Understood. And how is the market looking at the moment, Peter? How has it been over the past 12 months in particular, having to adapt from face-to-face meetings to things like Zoom and Skype, and because of the COVID restrictions on home visits and so forth?
Well, so, interestingly, we as a profession have managed to overcome the restrictions. We've not had at any point where we've not been able to continue to do the home visits because we've been an exempt class of workers that can still go and see clients at their home because it's part of a financial process. So we're still going to have the face-to-face visits, although the council have allowed Zoom signings, but as long as an independent witness is present. So for us, it's been quite uninterrupted. The lenders have struggled, if we're completely frank about it. Certainly this time last year, it was a dreadful situation because none of the valuers would go out. So we had to resort to desktop valuations, which caused a huge delay in pipeline. But market in terms of business levels at the moment, it's a very tricky one. We are as busy as we were this time last year, but it just feels quite flat. I don't know why. I think everyone's waiting for June 21st, and I think, but certainly, I think the customers certainly are very gung ho. They've all had their 2 jabs now, but I feel it just needs probably a bit of injection of advertising on television to pick things up again.
Yeah, I mean, for what it's worth, from my perspective, I think you will see an increase later this year for a number of different reasons. One being the actual one for what you've just referenced there, the potential 21st June. I know it may well be July now at the time of recording. It looks like full opening of everything's going to be put back. But I think the September 2021 will be the end of a lot of the government schemes to assist. Obviously, you look at things apart from stamp duty and everything else going on. If you actually specifically just look at, I think 17% of the country, are still not back at work full time, but they're benefiting.
Scary.
Yeah, they're benefiting from their 80% pay. If you can call it that benefit. But the problem is in the private sector in particular, you speak to accountants and you speak to a lot of people in that industry, they're very scared about what's going to happen to the private sector September 2021 onwards, with the end of some of those support mechanisms for businesses, especially as some of them will have been reliant on summer business being driven into them, and you going into the autumn and the winter months there. And then on top of that, I think you've got unemployment at 3-4% increasing, and then you've got also the repayments on bounce back loans and CBILS loans and other things like this, which obviously they can be put back and stuff. But the pressure on businesses, I think it's interesting, companies like Santander, HSBC, and pretty much every commercial bank will not allow a business account to be set up right now, with or without, even without an overdraft. You don't need to seek any lending. A lot of banks were allegedly very difficult to set up an account with, and I think that reflects that banks' resources are being taken up massively with their existing commercial customers anyway, and everything else. I don't think it's necessarily they don't want to lend. I think part of it's down to resources and how they spread those internally. But I do think, speaking to a lot of people in those areas, I think the reason you may well see that boom in equity release is, one, potential redundancy for the over 55s. Go to your IFA, what's in my pension? Maybe not enough is the answer coming back, and therefore it might be that you don't have the luxury of going back into employment, or it might be that you don't want to have that choice, necessarily go part-time or something, and therefore equity release is that answer. But I also think it might be the banker mum and dad having to bail out children. I've seen Barclaycard in the last 12 months significantly reduce credit facilities available to people because they're really concerned about lending and so forth. So, and I also have seen a lot of mortgage brokers start to encourage brokers to take their exams in equity release and add that arm to their business. And they've got their own, 70% of businesses word of mouth recommendations for a lot of mortgage brokers. And therefore you would imagine that there would be more there, because rather than them either A, paying no interest in it, or B, having to risk referring them elsewhere, if you like, the ability to do that in-house, I think, may also add to that. Not so much marketing, but certainly word of mouth, because hey, we do this. They've already been trusted to do a mortgage for friends, family, whatever in the past. So I think you will see an increase in that, particularly September, October onwards. What, Peter, for you and either for you personally or for the firm, what do you want to achieve in the next 12 months? What does the next 12 months look like for you?
I think from our perspective, we have lots of things on the go at the moment with IT. So we're finalising the development of our client portal. So as I mentioned earlier, we have a financial advisor portal where they can get updates 24/7, virtually live. Obviously, with a I think it's a 1 minute delay as to that. Well, we've been working hard in the last 12 months to try and make it more of a paperless system for clients as much as anybody. Obviously, we're constrained with our client base that some of them have a computer in the corner, which has probably got more dust on it than anything that's not even plugged in. So that's a work in progress. I think as a firm, we're trying to grow in our expertise. So for us, we are strengthening our RIO proposition, our retirement interest only mortgage proposition. So we actually gave a host of seminars on that several years ago, and I think we were probably 12 or 24 months too early. We toured the country, myself and one of my colleagues, giving these talks in association with several lenders, and they were very well received. But the volume is now we're now starting to see the RIOs are coming, to the fore. So they'll never overtake lifetime mortgages, but they certainly seem to be, as you were saying, it's very much okay. We don't feel we're old enough for equity release. We have some income, so we can still keep on paying something. So we're very much looking at developing our RIO offering, sort of as a department, and as a firm, we are looking to kind of specialise in our niche areas. So we have got a strong wind farm, legal sector, and other areas as well.
Well, thank you so much, Peter. You've been an absolutely fantastic guest, and thank you for listening. You can find out more information about how to contact Peter and Ashfords in the links to this show. Please share and spread the word about the MLC show. And if you're listening on Apple Podcasts, please hit us with a 5-star review. And remember to check out the products and services at malequal.co.uk. More importantly, stay well and please take care.